Hello folks, I'm L.A. Little and this is today's short take. You know, the headlines today everywhere you're going to see is about the largest day down in China since 2008 crash. And yeah, it was down 8% or so. The issue here is, volume didn't expand. You're coming back into an area where if you're going to see buying, it's going to be in this area at worst. And if not, then it's going to go test the lows. So I wouldn't jump to the conclusions that China has imploded. I think that's the wrong conclusion. I think that there is a risk that there is a larger move down coming, but for that to actualize, it has to get under this low. Otherwise, it's just a range trade. And by range trade, if we take and draw this out, you have this large range, and you're going to come down, or it looks like you're going to come down and try to test the lower end of that range. That's where all the volume is. It's going to be hard on this particular push to break that down. Now, if it does, then it's a whole different story, right? Then it's not really a range. And then you truly do have some sort of a larger, quote-unquote, crash situation taking place after an unprecedented 130% run in 1 year. So, is it possible you could come way down here? Yeah, it is. It's quite possible. But you got to break this out first. Otherwise, it's just a range trade. And for those interested, if you draw this range out, right, and then you project it down, as to how far it could go, you could see how it could come back into this area, and this ABCD structure would get you pretty close to that. So, is it possible to get down here? Yeah, if this really isn't the range and the range is farther down, sure. So anybody that's invested in this, you better watch this low. You want to see it undercut it, have less volume, flip around and hold it. If that's the case, then this 35% range is tradable, and then you got something you can actually deal with. That is China, that's Shanghai, and that is today's short take.